Let's take a look at the AI trade. It's booming right now. Nvidia shares hitting an all-time high in the stock on an upward swing since its strong earnings report in May, seeing a big turnaround from earlier this year. Joining me now, we've got Dan Ives, Wedbush Securities Managing Director and Global Head of Technology Research. Dan, great to have you on the program with us. We saw strong third quarter results from Micron, boosted by AI demand. So how does this factor into the broader AI trade and add just another thought in the frame of mind for some of the Nvidia investors out there as well?
I mean, there's one chip fueling the AI revolution, and that's Nvidia. And I think investors are starting to recognize we haven't even seen the biggest growth driver yet of AI, not just on enterprise and the use cases, but on the consumer side and ultimately autonomous and robotics. And in my view, it's not just 4 trillion. I mean, we're going to be looking at a $5 trillion market cap in Nvidia.
And so at what point, what's the kind of modeling and the time frame that you're kind of anticipating that could come to fruition?
Street's still underestimating growth longer term, I think by 15 to 20%. That could be conservative. I think when you actually see the dynamics playing out today, remember, they took China basically out of their forecast. And if you have any trade deal, a big chip on the table is Nvidia, and I believe they're not going to hand that business on a silver platter to Huawei. So I think right now investors are starting to recognize the growth opportunities for Nvidia, and we've talked about demand to supply 10 to 1.
And so as we're thinking about that, and you mentioned China, one of the major factors within any type of trade deal is going to be IP, that intellectual property. What is the likelihood that we see an outcome on the intellectual property front that is favorable for Nvidia, and what does that do in terms of unlocking some of that addressable market?
I think probably less for Nvidia from an IP perspective. I think the bigger issue from an IP, especially a lot of the software players, that's been the big issue when it comes to China. But look, there's a give and take here. And the reality is that Jensen wants that business back. He's talked about it. And, when you think about it, 8 billion a quarter, but eventually that could be 10, 12 billion a quarter. But China, they know that there's only one chip in the world fueling AI revolution. That's the godfather of AI, Jensen, Nvidia.
We've heard some really strong calls for even $6 trillion market caps for Nvidia here. What is, you think, the critical kind of checklist in order for us to get to that point?
I think checklist is, and just take all the geopolitical out for a second, but I think first it's the use cases that are now exploding. And we're seeing that in the hyperscale and Microsoft, of course, names like Palantir, which continues to be one of our top names. Then it's the consumer piece, everything Zuckerberg and Meta's doing, what we're seeing with Alphabet and others, because that's a whole nother leg to the stool in terms of the consumer side. And then the holy grail, autonomous, robotics, humanoids, that's not even being factored in here today.
And so you mentioned a few of the other themes that I wanted to get to as well here. You, of course, are tracking Palantir and another name that's seen new record highs. What do you think is really contributing to the mindset around the trading and the thesis for Palantir right now?
Look, I mean, they hate it at 20, despise it at 70, call it expensive at 100, right? I mean, now the bear is 145 because, as we always say, they can't find AI in the spreadsheets when they're in hibernation mode. Palantir, we view as a $1 trillion market cap next 2 to 3 years. There's no company from a software perspective that has what they have. And I think now as they go further and further after the enterprise, as sovereigns go down the AI path, this is just the beginning of what's going to be a golden age of Palantir. And I think, look, is it expensive today? Of course. But if you look out 2, 3, 4 years, I mean, we're going to be talking about one of the most transformational companies in the world.
And so within that transformation, they also might need to see a transformation of their own that you started to allude to there. And I just want to hit on that because they often talk about how much their contracts are intertwined with government entities. To what extent do you think we see that start to accelerate towards large enterprises with large recurring run rates as well?
Yeah, and look, that's been a huge part of the valuation uplift that we've seen over the last, 18, 24 months, because now more and more they're an enterprise play. Government never really get a multiple, just given the nature of contracts. Now in the enterprise, there's no AI bake-off that Palantir is not front and center. Either they won or they're going to be at top of the list. And I think that's really been the difference maker is on the enterprise and investors recognizing they're one of the biggest disruptive technology companies in the world, along with Nvidia, along with Tesla, I think this is just the beginning of that next chapter.
While we have you here as well, we were taking a look at one of your other notes, specifically around Microsoft right now, and it's amazingly and kind of befuddling sometimes how it's not the sexiest stock out there, yet it continues to show how it is a powerhouse that can chug through any environment here. So as we're thinking about how Microsoft can differentiate itself within an era where they've already been early investors in generative AI and trying to figure out where they need to further entrench some of their market positioning there, what do you think is the next critical leg that Microsoft needs to implement in order to see that realized within their results?
Yeah, great question. I think it's look, the commercial cloud business, Azure, the AI stack. I mean, this is right in their backyard. Look, if you, of course, Amazon, Google, they're going to continue to have success, but no one understands it better than Nadella. And I think that is something the street is still underestimating. We talk about 25 billion incremental growth into next year. The street's not even factoring in. And that's why I always say, like, this is a name. If you look at a traditional glasses of an old Microsoft, that's not just the way to think about it. You have to, when you look at names like Microsoft, IBM, Oracle, these are transformations that are happening today in terms of the install base and the AI stack. And that's why these stocks are doing what they're doing.
Within that, we also know that up against Google and their own cloud product, and then additionally against Amazon and AWS, what type of market share, not shifting, but stealing of that market share, are you seeing in terms of the jousting between these three major players on that cloud front?
Yeah, I mean, to put it, look, if you think Amazon, let's say 6 or 7 of every 10 deals, right? They essentially, from a cloud perspective, because they were first mover, basically owned. And now, as you think about more and more customers move into AI, move into the stack, think about that 7 of 10, it's kind of reversed. I think Microsoft, 7 of every 10 cloud, from a hyperscale perspective, they're winning. That's the difference. It's kind of been reversed. No, Jassy is clearly going after it's going to have success. Google and Curry and what they're doing as well. But Brett, this is Redmond's backyard in terms of the enterprise. And I think that is why they're so successful because these are install-based customers and they have the full stack from 365 to Azure to Copilot.
Dan, just lastly, while we have you, and I got to be brief, just going to throw it out there. Cybersecurity in the age of geopolitical conflict, how much more do you think that gets the mind of investors, considering what we've watched play out over the last several weeks here? And, oh yeah, by the way, we still have a deadline that's looming on the tariff policy front as well.
Just another talent for CyberArk, Palo, CrowdStrike, Zscaler. Even when you talk about retaliatory, if you saw that with Iran or retaliatory cyber toward U.S. Israel, it benefits cybersecurity companies. That's why it's going to continue to be, I think, probably the biggest outperformer within broader tech. And that's why we also have a bunch of cybersecurity in our Ives AI 30, because that's the second, third derivative of AI.
And then, Dan, just lastly here, and I do want to get to our next guest, who is sitting on set with me. And one of the questions that he slid me, Thomas Hayes, who I'm sure you know well as well, he slid me a question saying there's 10-to-1 demand to supply for Nvidia on the chips front. Do we need more progress on fabrication, especially considering TSMC and Intel right now, to help fulfill some of that demand?
That's a great, and he's great, and that's a great question. It's true. I mean, because ultimately you need more supply, you need more production. The problem is, like, look, Intel, I mean, they're stuck in that right lane, 45 miles an hour in a minivan, right? Like, so that's part of the problem. But it's a demand supply issue Demand's not the problem, it's supply.
All right. Dan, thank you so much for taking the
Thank
time
you.
here with us just after the opening bell. We appreciate it. On Wall Street, strategists see AI and economic data replacing tariffs and the tax bill as the big focus for investors going forward. Barclays strategists expecting more gains for stocks with AI driving earnings. Joining me now, we've got Thomas Hayes, who is the Great Hill Capital Chairman and Managing Member. Thomas, great to have you here on set with us today.
Great to be with you, Brad.
Absolutely. I had to try and squeeze your question in with our previous guest, Dan Ives, but I got to know as well, since you are also very closely tracking this space in AI, how are you looking at AI and how it's playing into the broader market rally right now?
Yeah, look, I think Dan is spot on. The demand exceeds supply by 10 to 1, and that's the issue with Nvidia right now. Their business model depends on the kindness of strangers. So Taiwan Semiconductor has limited their revenue growth each quarter to $4 billion because that's all they can fulfill. So for the next phase of Nvidia's growth, you need to see those fabs get finished by Taiwan Semiconductor to increase capacity. And I think the dark horse that no one's paying attention to, you've seen a stealth rally in Intel 45 miles an hour in the slow lane, 10% plus this week, and I think part of that is Lip-Bu-Tan is cutting staff. I think the other part is they're the only game in town with fabs at the 10-yard line ready to spike the football and the touchdown. There are chips being tested on their fabs, and I think if they can be a part of that supply solution to Nvidia and others, that could be kind of a dark horse. So while you see maybe Nvidia double, if Intel gets it right, it could be meaningful.
You know, that also raises a similar question that we had brought up in our previous conversation with regard to how many of those chips will be able to be shipped to other parts of the world if so much of the money that's helped Intel get to this point has really been prioritized at bringing up and scaling up production here in the US.
Yeah, well, I think once they get that production set, I think the sky's the limit as far as global demand. And I don't think they need to be best in class. I think there's going to be so much unlimited demand that anyone that can produce, even second tier.
That's a weird call to say, hey, just be mediocre in class.
By the way, that's my base case with Intel, is they are the leader of mediocre chips. And by the way, as they bring this capacity online with Lip-Bu-Tan, he did unbelievable things at Cadence Designs. That was a multi-bagger. No one's better. He's going to fix it. They're going to be part of the solution. It's going to help Nvidia. It's going to help Intel, et cetera. And it's going to help boring, normal businesses that implement AI, which Dan alluded to, which is going to be huge, which no one's looking at right now. Right now, you think AI, you think Mag 7, you think Palantir, you think Nvidia, but the big beneficiaries are also going to be real businesses.
What needs to continue to take place or transpire within business spending towards AI to really continue to allow the AI trade to keep its foothold on this market and be the kind of core barometer of the investment psyche, if you will?
Yeah, it's really interesting because you see the Mag 7, and there's like a good news is they're benefiting from the AI trade. The bad news is their earnings growth is collapsing because they are doing all this CapEx. So Q1 of this year, earnings growth in Mag 7 was 27%. Q1 of next year, 2026, earnings growth is going to be 10.2, but the multiples have not really compressed. Yeah. Then you take the unmagnificent 493, all the boring companies that are going to benefit from these technologies in terms of implementation. Their earnings growth was negative. It's going to be 10.3%, and the multiple is meaningfully lower. So I think there's a lot of unexpected AI opportunities. If you take Brad Jacobs, for instance, he does all these roll-ups. QXO, where he buys boring businesses, building supply companies, et cetera, and he goes in and he doubles EBITDA with technology. He's a huge implementer of these technologies in boring businesses. GXO Logistics, they're one of the first businesses using humanoid robots to help move the stuff in the different distribution centers and warehouses. So it's pretty wild.
I've got Brad Jacobs' book on my desk. Thank you for sending that, Brad, by the way, from one Brad to another. Just lastly on this topic here, because we're going to discuss a range of topics throughout the morning here, but as you think through the leaders of the tech rally right now versus the rotation that we could see, names that have been underappreciated, where are those parts of that trade?
Yeah, I think, the market's going to continue to push higher for the next 4 weeks. Why? Partially because of global liquidity is back at an all-time high, partially because earnings expectations are really low. They've taken them down from 9.3% to 4.9%. So that's going to drive the bust. Mag 7 is kind of back up to the top of the range despite earnings growth deceleration. So I do think as you kind of stabilize after we make those new highs and everyone gets euphoric and tech's got to push it up because of the weight in the indices, I think that second half of the year where you're going to benefit is the unmagnificent 493. But it's interesting, I'm looking at today, small caps are outperforming the NASDAQ. So Russell 2000 outperforming the NASDAQ, outperforming the Dow Jones, outperforming the S&P 500. That is the small cap index is the most shorted in history right now. Mm-hmm. And these are the type of companies that benefit from these technologies. And I think you're going to see the back half a big surprise in the 493 in small caps in companies that will be beneficiaries of the great things that the Nvidias of the world are providing.
Simple question. Are we witnessing another tech bubble? Now, you and I have been here at Yahoo Finance for a good bit. We've seen various bubbles. Cannabis stocks, I think, fell into our tenure. We've seen it with various AI stocks. From your vantage point, are we witnessing another one?
Another hot take for you, Brian. No, I don't think we are. I think AI is going to lead to insane productivity. I don't think that's being accurately priced into this market, priced into these tech stocks. I've been speaking with a lot of Wall Street strategists this week, and they tell me that Nvidia is undervalued, that other Mag 7 names are fairly valued, that this market is not stretched at all, that valuations are actually kind of low at this point, and there's a lot of cash on the sidelines. A lot of folks have been repositioning their portfolios. They've been putting money into defensive sectors. They came into the year maybe a little bit overweight on some of those tech names, so they pulled back a little bit. But now at this point, with tech leading the way higher once again, there's this rational thinking among especially among retail investors, that maybe they should be a little more aggressive, a little more overweight on the tech trade, because there's just so much growth at this point. And with AI just continuing to rapidly expand with these earnings, I mean, let's be real. We're not at the levels maybe of Nvidia that we saw a few years ago, but these are still pretty insane numbers, and I think a lot of investors have just gotten used to that. And compared to other stocks out there, especially small cap stocks, these larger companies are just able to weather a lot of this volatility, able to weather a lot of these risks in a way that some of these other players just can't. So I'm bullish on tech, and I think we still have more room to run.
All right, well, I appreciate that. It's high-level analysis there, Ali. I'm going to go on the other side. I think we're seeing some bubbly activity. And Inez, I'm going to come to you on this one. Circle, are you kidding me? The move in the stock since its IPO early this year, I think I checked the Yahoo Finance charts yesterday. Stock is up like 800% since the IPO. What? I mean, that has to be bubble activity.
Yeah, so that IPO price was $31 a share, and you can take a look at the $213. Look, it depends on which analyst you talk to, because stablecoins, this is huge, and it's going to, what the market is doing right now is, it is, of course, pricing in all of this growth ahead of time. You do have an analyst that just came out with a neutral rating for Circle, just basically saying that all of this has been neutral. Yeah, a neutral, because talking about rising competition because of the Genius Act that's expected to become into law later this summer. That is going to increase the amount of entrants that you have in the stablecoin space. And we have seen deals happening. We have seen a lot of activity in that area. And so what he's saying is that you're going to have an increase of competition, and Circle is going to, face that eventually. But nonetheless, you do have price targets in the 200s for the stock. It's a 213 right now.
And of course, you can catch the sentiment on Circle on the Circle ticker page on Yahoo Finance. You can check all the ratings. We're going to have to leave it there, though. Ali Canal, big hot takes. Inez, big hot takes. Ben Eamons, always good to see you, man. Had a couple big takes of your own. Appreciate it.
Coinbase stock has surged more than 40% since the Senate passed the Genius Act, a bill that would establish a federal framework for stablecoins, digital tokens backed by assets such as the U.S. dollar. But is it still being underestimated? Julie Hyman down at the New York Stock Exchange with more on what analysts and experts are saying about the industry. Julie.
Yeah, it's been really interesting, the surge that we have seen in anything stablecoin related. Circle shares, of course, have been the poster child for that, right? Because it is the only pure play way to buy into stablecoins. The other main stablecoin provider, Tether, is not publicly traded. So that's why we've seen all the enthusiasm with the passage of the Genius Act that then will provide that framework for stablecoins. But what we've noticed ever since that passed is that it's almost like stablecoins are the new blockchain, right? Everybody is throwing out product announcements related to them. Over the past week, we've seen companies from JP Morgan to Fiserv to PayPal make these sorts of announcements. So now, especially with the surge that we've seen in those Circle shares, the question is there indeed sustainability? What is the use case for stablecoin, and what is the future going to be? Now, the Bank for International Settlements yesterday put out a paper that raised some questions about this and actually caused some turmoil in those Circle shares. It basically said stablecoins, quote, may at best serve a subsidiary role here. It says the monetary system can transform into a next generation system built on tried and tested foundations of trust and technologically superior programmable infrastructures. Basically says that the system as it exists can integrate with this stuff, but it probably won't be replaced by it. And that's something that some analysts are trying to grapple with as well. I talked to Dan Dolev of Mizuho today, and he called stablecoins the Gen AI of 25. In other words, this is a new technology that there's a lot of enthusiasm about and a lot of money being thrown at, but there's not yet a good understanding of what the eventual effect on industry, on the financial system, the use cases, etc. He is theorizing that it's probably not going to be that much of a consumer-facing product, except in one important use case where we're already seeing it be used, and that's for cross-border remittances, right? In certain countries where you see more volatile currency action, for example, it can be quite useful as a way to send money. We're already seeing that happen to some extent. So he theorized down the road, perhaps you could see it disrupt more business to business than sort of consumer facing. And in terms of what he thinks investors should be doing right now, he thinks that the likes of Visa and MasterCard and PayPal, which have fallen in recent days on concerns over competition from stablecoin, he says investors should get into those names because he thinks that that disruption has for now been overstated. But Josh, I just want to emphasize, there are still just so many questions about this. Even though the Genius Act puts in place that framework, we haven't yet seen a lot of products and a lot of adoption that is out yet for stablecoin in the US. And so this is a little bit of a wait and see situation there.
Indeed. Thank you, Julie.
The early bird catches the gains. This is Morning Brief Market Sunrise. Live from London, we deliver an early read on global markets, from overnight action in Asia to real-time sentiment across Europe's major trading desks and a live look at US futures. We cover the stories to help you, the individual investor, get the edge with actionable financial information and unbeatable context. So grab that coffee, tap in, and let's own the morning.
Howdy, y'all. I'm Elizabeth Kaur. Welcome to The Big Idea from Yahoo Finance, the show that navigates the world of small business and entrepreneurship. All businesses start with one light bulb moment. And each week, I'm going to take you on a journey with America's entrepreneurs. As the co-founder of the small business funding platform Hello Alice, it has always been my mission to ensure that entrepreneurs have the tools they need to live the American dream. So let's cowboy up.